Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's Friday Roundup. Couple of things to talk about, so you might as well get some chips and something to drink now because I'm going to be boring you for a while. Let's see how this one goes. The week in review. The OMNI was outstanding. Thank you, OMNI. It called direction for us day after day after day. Scared the pants off of me to even think the long side again today, but OMNI called long. The trade worked out. Imagine that. We'll see what happens coming into next week. But I think this video, because I've read so many emails this week, and on my Friday roundups, I like to try to get a little bit of a lesson out and try to, just help out the traders who've written into me, give back a little to you guys. So, got a couple of things up here that we need to discuss. We're going to talk about how to use my work. I've mentioned so many times on my videos, the best way for you to use my work is a trading tool. You have your work. I mean, I'm no better than anybody else. I don't know where these markets are going. How could I? How could you? How could any of us? But our best educated guess is what we need to live on. You pull your charts, you take a look at the news, you look at a guy like Oscar on the tube, you figure out where you're going to buy and where you're going to sell. But hey, there is no holy grail and there's no crystal ball. I don't own it. I wish I did. Granted, I've been, I can get uncannily accurate sometimes. I've said this to many people, and I am as shocked every day that I'm right as the first day I was ever right. Don't ask me how we can possibly sit here and look at charts and come up with work that actually works when the market's open. Because to me, if you ask me, one and the two they don't make sense. They don't connect. You could sit there at night and think whatever you want, but when the market's open, it doesn't care what you think. But for whatever reason, I'll take a look at my charts, I'll do my work, me and OMNI will have a little bit of a work session, and the next thing you know, I write down a note that seems to make sense. I put it out on YouTube video, and the market seemed to react right around those numbers. But I find I'm as surprised every time. I'm like, oh, I was right again today. Can you believe it? I shouldn't say it like that. I'm wrong all the time as well. But when I am right, I'm as shocked when I'm right as the first time I was ever right. To me, I'm amazed that we can actually look at charts and come up with work that makes sense. But anyway, that being said, it actually does work. That's what shocks me. You guys call me with things or email me with things, and they work out. I think of things, I look at charts, I put them down, and it works out, and I'm just amazed at how as technicians, it actually crosses over into the market movement. But it does. But again, there is no crystal ball, and there's nobody that can tell you for sure, with certainty, buy it right here, it's going up, and get out there. But I'm brave enough to try every day, and I say it to you guys a good 8 hours before the event. Well, sometimes it happens right away. But I put it out there before the fact, before I place my orders, before you place your orders. We have a trading plan. We put it into effect. And boy, we've been uncannily lucky with our direction. Let's just continue. But, we can't look at this as, hey, we've got it down now, and now we got it right, and we got the tool. Because who knows when it's just going to go topsy-turvy on us, and the market's going to go like this again, and we'll fall out of sync. But that's part of being in here and trading every day. And you stand there with your dukes up. And even when you're wrong, you stand there and you get back in and you trade and you keep your stops in. A little bit of a rant there. But I just wanted to say there is no holy grail. There is nothing out there to tell us with certainty where we should be doing our buying and selling. But if enough people look at analysis correctly as a force when they all approach the markets together as a whole in the market community, it sort of moves in the direction that the sharp analysts out there have noticed it should go and told everybody else. So it's sort of a self-fulfilling prophecy. The analysis seems to just fulfill itself. And I've shown you time after time, reports come right out in the analysis. You can look back at videos where I'll say, there's got to be something coming out this week because look what's going on in my analysis. Look at the way the stops are getting short. And boom, something comes out. It even happened this week. I got blindsided this morning by the report because I wasn't even watching the tube or my newsreel for the information when it came out. I did see the blast off, and I immediately, instinctively just typed, hey, get out of the trade. I got out of my trade, and that's it. I was done for the day. That came out in my charts because I did not read what that report should be. I didn't read its expectations. I just saw it come out in the chart that something big was going to happen. I got long for it. I got out when it happened. I was done for the day. That being said, let's go back to the beginning of this conversation because it was about how to use my work. I got a bunch of emails today. Oscar, I didn't get in down there at the Lowe's. Well, you know what? I didn't even realize that a lot of people didn't get in down there at the Lowe's because I sent a quick, hey, I'm going to the market right here. Turns out, you know, I've had these Gmail problems with my server lately, and I don't think anybody saw that email that went out. I went to the market, and hey guys, you know I put the trades out before they happen. When I do flash updates, I'm trading with one hand and I'm typing to you guys with the other because I want you out when I'm getting out because it's the, you know, hey, let's get out. It's our opportunity. Let's do it. But you guys are at the mercy of the emails unless you're at the website. But in any event, that's all tied together in my database. You type it at the website, it's supposed to update the website and shoot out the emails automatically. You know, I'm a trader, I'm not a computer programmer, so when things like that happen, hey guys, you know, things like that will happen. But there's a way around that. Again, I am just to be used as a trading tool around your good work because you are a trader who's going to have your own dynamic approach to the market, and maybe my work melds well with your style and maybe it doesn't, and maybe some other guy's work melds well with you, but everyone has their own little niche. What you have to do with my work is take it. If I say buy here or Omni has support here, you're supposed to think about what to do when the market gets there. Not have your order sitting there and then waiting for me to say what to do once it gets there. That's not going to teach you how to trade. That's going to teach you to have to wait for me to figure out what to do next. And you know what? What if I wasn't here tomorrow? All this work I'm doing to teach you guys will go out the window because instead of learning, you've learned to wait for me to help you get through. That's not going to get us anywhere. The whole idea behind this show is to teach you people how to eat, how to fish for a living. You know, of course, how to trade for a living. But, you know, as opposed to feeding you, I'm supposed to teach you how to do it yourself. And that's what you got to get out of the work. Now, hey, there's a lot of good traders that wrote to me and were like, Oscar, how did you do it? How did you know when to get out? But how did you know to go to the market at that point? Because I put my orders in when I saw the market was there. I called instinctively and I just went to the market, some guys would say. Or I typed in, go to the market. And that's what any good trader is supposed to do. When you see it gets near my level, do something about it, guys. I can't be right there and get you that email sometimes. Things are going to happen. It's the technology I am not in control of. So here's what we're going to do from now on. MIT, market if touched. From now on, if I give you an order, Omni says support at 15.15 in any market. If you don't know what else to do, make it a 15.15 MIT order. That means market if touched. If the market trades down to 15.15, it immediately turns into a live market order and you are in the market. Because the idea is for us to get in at an area, not an exact price, because again, how could I know? How could anybody know? Thank you. You know, I love the fact that you have enough faith in me to think I'm going to know exactly where to get in, but how could I? How could anybody? So you take my level because you see, sometimes I can read these charts. You take my level and you do something about it when the market gets there. This way, by the time my email gets to you, you can say to yourself, nah, Oscar, I already took care of that, but thanks for the heads up. I can't be there for every moment. I would love to. Maybe when we get a little closer to virtual reality where I can have a camera and you guys can see what I have to say, and I could just go, hey, let's get out, and everybody can do their reacting. But until then, all I have is the email and the website for you guys. So you got to help me help you. You got to get yourselves in, and you got to get yourselves out around the levels I've prescribed. And then hopefully the email comes in and it'll jive with what you've done. So with that, there is no holy grail. I'll do my best to continue giving me, the Omni is the closest to the Holy Grail I've ever seen in my life, but I can't blame that totally on me. That thing is as accurate as the day is long with direction. Again, it'll have its bad calls, I'll have my bad calls, and you guys will be sending me hate mail at that point, and I'll take the hate mail, but you're still going to stay with me until it gets better again, and then I'll get the good mail again. So stick with me on this. All right. Enough with that. Remember, use my work as a tool around your own analysis. Go to the market when it gets close to my buy level. Go to the market when it gets close to my sell level. If there's a stop, don't ever move the stop. If I don't tell you to move the stop, if you do move the stop, you're not using good technique. Don't ever move the stop. We're going to get the stops next. So I hope I've made myself clear on that. Traders, if it gets to one of my levels, go in. Do something about it. It's the only way that we're all going to score on these trades. We're calling direction right, but we're going to be stepping all over each other if we're all waiting for an exact point to get in. Okay? I'll continue helping, but come on, guys. You got to help me help you. Okay. Did I get that point across, Mike? Because I know I told you it's been on my mind all day.
I think you did.
I think I did. Okay, next. Stop placement. The folly of conspiracy theory. Conspiracy theories. Look, there is nobody out to get you. And you know what? Dr. Rock, this segment's for you. I told you, I think I wrote you back, told you I read your email. This one's on you, guy. There are no conspiracy theories that you should be holding to. There is nobody out there running your stops. Okay, there are people who will not place stops. And here's like one of my favorite fallacies of man when it comes to trading. I don't need a stop. I'll just exit when I'm supposed to. Hey, this guy's so good that he's just going to know what to do at the moment that he's supposed to. In fact, I guess on Tuesday, last week when the S&P began to crack, if he was long, this guy must have been so cool that he just went, hey, I'm getting out because I'm supposed to. And he went, get me out, and he got right out of that crashing market. I'll bet it was nothing for him. You see my point? I'm being facetious. You can't do it. I don't need a stop. That statement alone gave me gray hair. What do you mean you don't need a stop? What planet do you trade on? Yes, you need a stop. It needs to be placed first, and it needs to be in at all times. Because if on Tuesday you went to the bathroom and you're the guy who knows, and look, there are a lot of people out there that are really good at that. They get themselves out consistently, and they don't usually get hurt. But there will be the day that something like the stock market breaks or the president gets sucked out by a nuclear, the clouds open, something pulls him out, the president's gone, and next thing you know, the market's doing this and doing that, and you didn't have stops in. Godzilla's gonna come here again and get another country, and the world's gonna go crazy, and you won't have had stops in. It doesn't work. Take my word for it. I know I'm joking around a little, but today is the Friday Roundup. I don't have to be all that serious. But these things happen. The Russian coup has taken place. Markets, if anybody was trading back then, when the Russian coup took place, I remember the Japanese yen had at least a 500 to 700 point move. I think the British pound had a 1,200 point move on that. Imagine you didn't have stops on a 1,200 point move. These things will happen to you. You have to have a stop in. Now, if you're the type of person that does get right out of a market, put a stop in that's at a ridiculous level. I call those emergency stops, insurance. If you're in here, any market, and your mental stop is here, and you're the type that will always get out, have a stop in up here somewhere in case something goes wrong. At least you've gotten knocked out. Granted, once you get out here, you cancel that stop at all times, but I always have an emergency bracket in around my trade. Far away, limit up sometimes, limit down if there are markets that still have limits. But I have my emergency stop in. When I was in the pit, I would do that. Even when you don't place stops when you're in the pit, only if you step out of the pit, and only the smart guys knew to do that. You just stand there and you get in, you get out, you get in, you get out, and you still get hammered on those big days when the news comes out, but at least you can get out because you're right there at the action. There is no typing, there is no telephone. But I would always have a stop somewhere. I'd hand it to a buddy. I'd write it, say, here, man, put this in your book in case something goes wrong. In case when the market's moving, I fall out of the pit. By the time I get back up and stand up again, we could be 40, 50 cents higher in silver, so please take that stop. I would even do that as a pit broker. That's how adamant I am about stops. So stops have to be put in place. Things will happen. Okay? That should be a lesson to guys. I'm sure there are other traders out there because I told you in my couple of videos back, I had guys call me and say, Oscar, I don't know what to do. I was trading without stops. Guys, place your stops. It'll keep you... Even after a bad day like that, if you had stops in, you'll still have money in your account to come back and try again. Without the stops, you're done. So don't forget, the folly of conspiracy theories. Listen, the S&P mini market trades over 1 million contracts on average per day. Over 1 million. There's nobody in there going after your 1-lot stop or 2-lot stop or even your 50-lot stop. It isn't happening. They're not coming after you. There is no one out there. The government isn't out there running markets looking for stops. Okay, you know what? I can understand the paranoia about it. Me being a floor guy. Yes, when the floors rained and there was no other way to trade, there was no electronic markets out there that just ignore floor. Yes, there's times when stops build up in certain areas and maybe you can accuse markets of running those stops. Yeah, these things are going to happen. There are stops, there's human emotion, there's people on the phones, they see where the stops are, the guys in the pit see where the stops are, things start to happen. But this is a different story. We're in a market that's electronic, nebulous. You're somewhere, someone else is somewhere else on the planet. All these orders come to a central spot. There's too much of it to be ran, and there's no group of people getting together saying, let's see what's above the market and push it a little higher and see what's up there. So no one is coming after your stops. You can think what you want about that. I am telling you right now, if you're the type that your stops get ran all the time, it's probably because you're on the defensive and you got those conspiracy theories in your mind. And as you're placing stops, you're placing them at those moments in time when the market's pulling you in, and it does. And when you stand there and stare at that screen and think about your money as money instead of poker chips or points, you get pulled in. You see the quotes, and the next thing you know, you're changing stops. You're getting in when you should be getting out. You're moving your stop when you know you should have got out there. You're putting a stop in the spot where you wanted to be long this morning, but the next thing you know, you're short. And I know these things will happen to you because it's happened to me as I was learning. When you get mesmerized by that screen, you are done. It pulls the emotions out. And then you can start blaming your broker and your sick aunt in the hospital and how the dog chewed up the garbage this morning and you stepped in it when you got out of the shower. And that's why I lost today. It was on my mind. You can come up with any excuse you want, but nobody's in there running your stops. The market is not out to get you. It is not happening. Forget it. You're there by yourself. You are insignificant with your 1, 2-lot stop or 10-lot stop or even 50. Forget it. Place them without the thought in mind that anyone's out there to get you, because they are not. But you have to place your stops. Newcomers in this business think they don't have to. You know, I just did that silly little segment about it. Place your stops before something crazy happens to you. All right. What else do we have for you? The trend is your friend. The S&P market, as you've seen me say in video after, and many videos I should say, and probably a couple this week, call me crazy, but a market is not a bear market until it becomes a bear market. I don't tell the market where it's going. The market is right 100% of the time. It is right. We are not. The market is right. It is going where it wanted to go, whether that is up or down. I don't care what government steps in the way. I don't care which big trader, George Soros, anybody in the world tries to change things. A market is 100% correct in where it's going. The best we can do is figure out where that might be, jump on the Bronco, make a few dollars, and jump back off before you get bucked. And that's what our job is as short-term traders. Well, this week, my OMNI and me say this market's been bullish. I said it to you, I think 2 days ago. I pointed out, I said, call me crazy. Market's been going up for this amount of time. Starts, all right, you know what? You got a market. Call me crazy about this. You got a market that starts here on your computer screen, and it goes like this for 4 years. A little bit, a couple of times during those 4 years, you get a little bit of this. And then it goes like this. When did that become a bear market? Can somebody fill me in on how to call bulls from bears? Because I think I missed something in my Bull from Bear 101 college course. Because you know what? That's not a bearish market. It is not a bearish market. Look at the S&P on a weekly. So it was going up and it had a little bit of a drop. So what? Does that make a market bearish? You have 1 week down at a week after week after week after week going up, and the whole world, everybody gets on TV. Oh, it's the end of the world. Oh my goodness, I can't believe it. It's 1929. It's the end of the world. The stock market's going down. Oh, what am I going to... It never ends. I have to turn the TV off. How could that be? How could the market suddenly have turned bearish in a day? Yes, if it is going to be a bearish market, we'll know because it's going to break certain levels that are going to be meaningful, and then suddenly these charts aren't going to look like they start at the bottom left of your screen and go all the way to the top right. Because when a market, plain and simple, analysis 101, when it starts here on your screen and goes all the way to here, it's bullish. Think what you want about that. Well, I don't know how that looks in the camera. It might be here to here. It's one of these. But you got my point there. So my Omni says we're bullish. I don't care what anybody thinks. I say to myself the same thing. Hey, that's not a bearish market. It's a bullish market with a hiccup. So I went long. We went long in the exact low day. The day the lows were in, we were long, and that was that. We've been long ever since. And I even said I was afraid of getting long again this week, but how could you not? Because why should the markets be going down? I'll bet you next week on TV, everybody's going to be going, oh, that was just a little blip in the market, and let's all get long. And if that happens, then maybe we will go back down again. Watch these guys. That's how it works. By the time it hits the public, the move's already been digested, and you have to look for what's coming next. And that's what I do. And I'm telling you, you go back and you look at my last 5, 8, 10 videos, you will see that Omni said, buy them, we're going to the highs, buy them, we're going to the highs, buy them, we're going to the highs. Okay, we're at the highs. Okay, you know what? I don't like this. Sell them. Sell them, we're going lower. And it sold them, and it sold them, and it stayed short. And then when we got to the bottom, it said, you know what? Jig's up, let's go the other way. And it turned around and got us long. Did it pick the exact buy and sell points? Well, almost, but that's not the point. The point is it gave you the direction, and it gave you the area, and you're supposed to react at that point. I can't do it all. But I'm telling you, go back and look at those videos. I'm standing here and saying this live because I know it's real. I telegraphed it before the event, so you can see that. You can see that it happened. And then we can talk more and see if we can do this again next week. Hey, again, don't kill me when I start having my batting slump, because I will. Everyone does. And boy, they're ugly, because when I'm wrong, I'm so uncannily wrong, I deserve an award for it. I can go wrong 20 in a row sometimes, but hopefully we won't see that. But what you'll notice when I am wrong, it's so uncanny because I'll be calling the high and low still, but getting it backwards in my trading. That is just, it happens. It's a batting slump. Every good batter has it. Every good trader has it. You guys, when it happens, we'll know. We'll bear down and go down to one lot. You got to trade through it. It's the only way out. But for now, hey, we're doing great. This Omni's doing great. These lessons are helping a lot of people. So anyway, Dr. Rock, I hope I got that stuff out for you. You're absolutely right. Thank you for that email. I think our followers needed that. So I'm glad you brought it to my attention. Okay, I'm trying not to bore you guys. I know it's been a long video. Last is the mirror image. You don't need to move anything, Mike. I think I can just do this. If you remember, I showed that to you guys. I told you that it's a three-part. It is a three-part formation. After the formation is formed, we'll know which way it's going to go. We'll take a look at your daily Japanese yen charts, and you'll see once it showed direction, it turned out to be within the next day or two. That's the way the market went. Very good, very good, very good indicator, the mirror image. You ain't never seen that anywhere else. I bet you can't look it up in any books, or at least I've never found it in any other books. It's here. It's not the first time I've shown it to you. Go back and look at some videos. These are all really good things I've picked up over 24 years. I am sharing with you guys. I've already been down the rocky road, so you might as well take a little bit of the fruits of that labor. I think I covered everything on the board, right, Mike? Okay, grain scales. Last thing. Grain scales. At this point in time, I didn't forget you guys out there, in the wheat, you should have been long at 475, long at 465. Hopefully, we'll never see this. Guys, my heart's with you right now because my heart's beating a little bit too. You should be a buyer again at 449 in May wheat. And then your stops need to be below 429. Now, that doesn't mean you put your stop in at 429 and get out when we get there. Again, how to use my work. You're going to think about what to do if we get down to the 429 area and start settling down there and don't pop out of the hole. Then you say, well, you know what, Oscar, I think this scale isn't going to work and I'm going to have to bail out of it. It's not a one-day decision, bang, it hit that price, I'm out. That would be suicidal. So be a trader when we get down there, if it ever happens. Same thing in May corn. You should be long at 422, 413. You should have another buy order if we get down there at 404. Stops again below 390. That doesn't mean at 390 you go running for the hills. You make a trader's decision. If we get around the 390 level, go under there, settle a day or two, and don't come out of the hole. This is a long-term trade. You don't make a short-term decision when it's time to get out. Okay. Omni had us buy 465s. The low of the move has been 464. Omni had us buy 413s. The low of the entire move in corn to this date has been 412. Wow. Hey, beans. You should have bought 764s. You should have bought 754s, and you should have bought you should have an order in. Again, please don't get there at 738. Stops go below 715. Once again, I'll say it a third time to get it into your heads. I am not the crystal ball guy. That doesn't mean at 715 you go, uh-oh, gotta go. At 715, we settle below that a day or two. The market doesn't look good down there. You start making a trader's decision about what you should do. But we never get there, guys. If we do, throw eggs at me when I come on the screen, shoot at it, whatever you got to do, I'll take it. But for now, I think we're going to make a fortune of these grain scales. Let's see what happens. Boom, boom. All right. I think I covered the week in review. Quickly, I would just like to read a couple of letters. Wayne, thank you so much. Wayne says, found your videos by accident on YouTube. Now I start my day with them. Nice. Wayne, if I can help you get in the right frame of mind every morning for these markets, that's what I'm here for. That's my best asset, to give you the mentality you need to do this right. I have the trader's mentality. I know what it's like to withdraw emotion. You know, I can give you what you need, and I'm glad you're using this exactly what I would hope people would use it for. I get you guys going in the morning. Go get them, traders, right? Come on. So, thank you so much. Your enthusiasm gets me in the right frame of mind. And first time he's been to my site, and he liked my site. Thank you so much. Wayne, I'm glad to hear. Mark from Holland. Hey, thanks for that article. I never actually thanked you, Mark. Thanks for the article from Bloomberg. Very cool. On corn. Absolutely right. You see my reasoning there, right? Good article, guy. If you don't mind, hi, Oscar. Just a note to let you know how excited I am. How excited I am how you present your videos and the way you approach the markets. Every day, I can't wait to see a new video from you. I am a beginning trader, and pulling the trigger is the hardest thing for me. Knowing where and when to get in the market fits my style and feeling. For me, trading for a living is a dream for many years. Hey, dude, I know all about it. That's my life. That's the way I've lived my whole life. It is a dream worth seeing if you can make reality. Take my word for it. For me, trading is a living for many years. For me, trading for a living is a dream for many years. I'm living in the Netherlands, and I can follow your videos very well thanks to the internet. The flash updates work well. Good luck with your new site, and keep up the great work. Thanks and greetings from Randy Holland. Hey, Mark. Hey, Mark, thank you so much. Great letter. Again, thanks for that article. Well, I am helping people. You know, guys, I'm sorry that I don't get to all of them. I think I've showed them to you on video once. I have a lot of email. I read every one of them. I try to get back to every one of them. But I don't always get to thank you guys on video. I thank every one of you, every one of my supporters. Thank you so much for your analysis that you send in. Thanks for coming to my site. Thanks for coming to the forum. Thanks for just noticing me here on YouTube. But better than that, thanks for allowing me to help you, because the feedback I get after people telling me they've never traded this way, they've never played stops before, but it's already saved them money in this area, or the mentality I get them into is helping their trading approach. I mean, I'm helping people. This is great. I'm going to leave a mark one day. Who knows? Anyway, that's enough for me for one day. I'm going to let you go with that. I hope my weekend roundup, my Friday roundup did a little help for you here. Hey, if you're at my YouTube site, www.youtube.com/futuresanalysts, hit the subscribe button. That'll give you your videos the moment I put them out. You know, YouTube will just disperse you an email right to your email box. Boom, you know my video's out there. You can come take a look. You know, look at the videos before you approach the markets, and use my work as a tool, not as the Holy Grail. It'll help you in that fashion. And don't forget, every order is an MIT order to get in from now on. When you're getting in on a buy or getting in on a sell, if the market allows, get in on an MIT. It'll help us. Okay. If you'd like to get on my Flash Updates database, just go to my website and register, and that'll automatically get you on the Flash Updates database. Otherwise, email me at www.gmail. Oh, no, what am I? I'm a Gmail.
Futures Analyst.
Oh, I'm futuresanalysts at gmail.com. I got a little confused there. Futuresanalyst@gmail.com. Give me your email address. I'll put you on my Flash Updates database. Flash Updates are essential for you to trade in sync with me. To be successful at this, I give you trade recommendations, and then I send out Flash Updates telling you to get in and get out as quickly as possible. If you're not on my Flash Updates database, you won't get those emails. You will see them if you stay at my site on the OMNI page, and you hit refresh, you'll see my Flash Updates come right up. Barring that, you need to be on my email Flash Updates database. If you'd like to reach me, you can reach me at 718-351-2266. And finally, the website is www.futurestraders.com. Traders, I hope you had a great week. I hope you learned a little bit back here behind me on this board. I hope OMNI continues to give us the great calls. I'll share them with you. I'll put out another video Sunday night. That's it, traders. Have a great weekend. Enjoy your time off, and we'll be back at it Sunday night. Good luck, traders.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.